We will start with a quick overview of ConexAmericas, and then I will hand it over to Lindsay to introduce herself and also to cover the content that we have in line for today. First of all, I'd like to introduce you to our board. Both Daniel and I are the co-founders of ConexAmericas. We've been doing this for about 7 months. The group has been an idea for about a year, and about 6 months ago, we decided to launch it. Daniel Chatelain is the head of Pay Academy and also the original founding member of PayPay, a pretty well-known organization that dates back to about 18 years ago, before the term fintech even existed. And then yours truly, who actually worked in banking for about 35 years and has spent the last 5 years doing consulting for fintechs in the Bay Area and throughout Latin America and Southeast Asia. Our board is made up of Gerardo Bonilla. He's the Chief Revenue Officer of DOC. Carol Grunberg, who is the Chief Business Officer at Uno in New York. Patrice Prayet, who is a fellow consultant and a serial entrepreneur and an inventor. And then Victor Unda, who is the CEO of Oki, a really well-known Latin American fintech that's doing some pretty neat things in the area. Just real quick, our key areas of focus for ConexAmericas is really broken down in these 6 areas. We really try to bring in insights about the market and the activities that take place throughout the region as it relates to fintech and technology. We also provide access to expertise and insights about the region. And in this case, that's exactly what we're doing today. We're covering for those 2 big points. We also work with entrepreneurs, VCs, and founders to bring them together to the table to hopefully raise capital or fund initiatives or look for additional opportunities. This is something that we've been undertaking for the last couple of months, and it's going on really well. We also provide training, coaching, and advisory services to active entrepreneurs, typically co-founders in the early stages, to help them get started and get access to key resources and key partnerships throughout Latin America, the US, and Southeast Asia in some cases. And then obviously, as a result of all this, we have a combination of expertise, insights, lots of collaboration, and lots of networking going on. So without any further ado, I would like to introduce Lindsay Lehr. Lindsay, I'm going to give you control of the mic, of the deck. There you are. And I'm going to mute myself. So thank you, Lindsay, again for doing this today. We really appreciate it. We're very excited to have you here.
Thank you, Danny. Great to be here. Thank you, Daniel and ConexAmericas for the invitation. It's wonderful to be here. I see a few familiar faces in the audience, which is terrific. You know, I've known both Daniels on the call for, I think, well over 10 years now, going back to BayPay out here in San Francisco. And those of you who know me or know PCMI, formerly AMI, you know us as the leading insights group for the payments industry in Latin America. So what I'll be doing today is providing an update on digital payments in the region. It's been a very exciting year. As many of you know, a lot of announcements, a lot of traction of new technology. So we're just going to see what impact that is having in the region so far. Okay, quick legal notice. Please do go ahead and throw your questions in the chat. We're going to have 2 opportunities to ask questions. I'm going to pause about halfway through, then we'll take some more Q&A at the end. So don't be shy. Even if it's not a question, if it's a comment or a reaction, we'd love to learn, love to interact with you. Really quickly, if you all do not know us, PCMI, we are the world's #1 knowledge partner for the global payments industry. We work with leading payments processors, networks, acquirers, banks, fintechs around the world, and provide guidance on how to advance in this rapidly changing ecosystem through primary research, our proprietary analytical solutions, and actionable advice. We help companies grow, measure, protect. Those 3 things all companies have to do at some point in their life cycle, and we're here to help you get access to information and make the decisions you need to make. We are focused, we've been focused for more over 30 years exclusively on Latin America. More recently, we've expanded doing work around the world. You can see our footprint there, but Latin America is our home. It's our sweet spot. It's where we grew up. It's where our core expertise still lies. Okay, so that is just a very quick overview. Let's go ahead and dive into what's going on in the region. I want to I love starting presentations off with numbers and how far that we've come. Those of you who work in the region know that digitization has advanced dramatically in Latin America in the past several years. We do this kind of analysis every year, and it's really thrilling to say that cash penetration, looking at the whole of consumer expenditure, cash has fallen to about 37%. Now, this is down from 57% in 2022. That's a dramatic and remarkable decline, led most aggressively by Brazil and Chile, right? Brazil is really the powerhouse of the region. So anything Brazil does impacts the overall regional numbers quite dramatically. But, we still got a third of the region operating in cash, but it's a huge decline. What I like to call attention to is this big chunk called money movement, right? We have instant payments, we have wallets, we have traditional bank transfers, we have checks. This is actually the largest chunk of consumer expenditure. And if we look at the next slide, we can see this broken down a little bit more into instant A2A and what we would call traditional money movement. That's going to be your traditional ACH payments, your check payments, wire transfers, and other kind of slow, non-digitized traditional money movement. Why is it important to separate these two out, right? We know that credit card and debit card are, look at this, split between credit and debit, which is really interesting. We know that those are the primary electronic and digital payment methods in the region, or at least they have been in the past decades, right? But instant A2A, look at how it's already surpassed credit and debit card, right? When you take cards together, it's still quite large, but instant A2A, really dominated by Pix, has already surpassed credit and debit card. Credit, debit, and instant A2A, those are really our digital payment methods that can be, they are based on, they can be based on digital technology, whether it's e-commerce, whether it's a soft POS, whether it's Pix or other mobile-enabled P2P or instant payment. As opposed to traditional slow payment methods, traditional money movement, and cash. So over 50% of volume is still slow in Latin America. But again, we've seen this massive progress. And just like cash has been the enemy, right? Almost every player in the region wants to go after cash. I also want to suggest that this traditional money movement is a big chunk that can be a strategic target for companies to go after. And it's usually not. It's usually just focused on cash. Traditional money movement to cannibalize or to convert to a digital payment method maybe takes a lot more innovation and then a lot more work. So I understand why that's kind of last on the totem pole, but it is a big chunk of the industry that we want to be looking at. Okay, just as we move through 2025 and into 2026, we have observed at PCMI, really looking at Brazil, really looking at Chile, Costa Rica, and countries around the world, there's three main ways digital payments can grow. And which one you pursue depends on who you are and what your end objective is, right? But the first way is adding value to digital payments, existing digital payments, through security, through loyalty, omnichannel capabilities, improving user experience, open banking, offering credit. It's using the digital payment as a gateway to other value-added services. And this is really going to be the way forward in advanced markets like Brazil and Chile. Another way to advance and grow digital payments is by digitizing traditional A2A, right? What I was just speaking about, this could potentially be a more difficult path to take. This requires strategies that are targeted around new verticals, traditional verticals like insurance, education, rent payments, service payments, typically very low margin, already automated within the banking system, typically efficient. B2B payments, embedded payments within SaaS, right? These are all opportunities to dig out traditional A2A and convert that into a more digitized flow. And then the third way to grow the pie of digital payments is to digitize cash, which is what most of us on this call have probably been focused on in the past several years. And some of the three best practices we have seen for digitizing cash: implementing and scaling instant A2A payments. There's many ways to do that, right? But at least as a general principle, expanding the card acceptance footprint. Today, card penetration of credit and debit cards, most, not all, but most Latin Americans have access to a debit or a prepaid card. So the growth is really today lying in that acceptance footprint, which is why we really call that out as a driver of digitizing cash in the future. And thirdly is empowering fintechs and new partners to go after this cash volume, which traditional legacy players haven't been that interested in pursuing, right? So just from a very foundational level, these are three strategies that companies can be taking in Latin America, depending on the market and depending on what their end goals are, to continue to grow the pie of digital payments. Okay, cool. So that's just getting us started, getting us warm.
Lindsay,
Yes, Danny, go for it.
sorry to interrupt. Quick question. You probably need to mute yourself.
Oh, let me mute myself. Let's see if that will help.
Yeah, that's better. Can you hear me? Okay, perfect. So for some reason,
Yes,
it's
now
not
it
working.
sounds clear. I think
Yeah, that's
I
fine.
think it's clear now.
It was some type of odd thing. So, as it relates to cash, are you seeing any particular trend in the more digitized countries that you think would easily translate to the countries that are struggling in shifting away from cash? I mean, we see Brazil definitely being one of the most advanced
Yes.
digitized countries. Are you seeing similar trends following those footsteps in the smaller countries? I mean, we know Colombia's got a lot going on, but where are you seeing
Yeah.
that trend kind of translating?
So the great question. I think because of the success of Pix, the global fame that Brazil has achieved because of the success of Pix, many countries in the region are working on implementing some kind of country level A2A. And Colombia is the best example of really going after a Pix-like model. Peru is not far behind. Argentina has something similar, although not operating at the same scale. Mexico is a very interesting case where we have a very efficient real-time payment system, but it hasn't been brought to the consumer in an effective way. But I would say that this first bullet here is the most trendy one, just because of how powerful Pix has been and because of a global momentum and inertia around instant payment. Of course, we've got lots of fintechs enabling P2P. They haven't necessarily scaled at the level of Pix or even Venmo in the US, but I would say this one is the most trendy. Countries like Guatemala, where we don't have as big of a push from the central bank or the banking coalition in general, is this fintech push. I was just at Fintech Day in Guatemala a couple of weeks ago. I had been there 2 years prior, and it's really fascinating to see how that ecosystem has grown, how the regulators are starting to embrace fintechs at a greater level, how the fintechs themselves are working together, working with CPGs, working with banks, really building that ecosystem. So I would say this first one is the top one, followed by the rise of fintech in smaller markets. The third is this card acceptance footprint, which there have been, of course, a lot of PSPs and fintechs working to expand that acceptance footprint. Clip in Mexico, is Bolt in Colombia, but it's been a little bit limited in terms of embracing by the wider ecosystem.
Thank you.
Yeah, you bet. Cool. All right, let's continue. So we wanted to take a little bit of a deep dive into e-commerce, just because this is one of the primary drivers of digital payments, very trending with kind of Asian marketplaces really growing all around the world and including in Latin America. And this is one of the fastest growing, continues to be one of the fastest growing segments of payments in the region. So this data that I'm showing you is for full year 2024. With projections of 2025 and beyond. We are currently refreshing this data. We do this every year. And by Q3, we'll have fully updated data for 2024 and a closer projection for 2025. So stay tuned for that. But nevertheless, this data is quite good. So just to show you guys what we're looking like in Latin America in 2024, we had over 600 billion in e-commerce expenditure. And e-commerce could meaning not only retail, but digital services, travel, streaming, gaming, even gambling in certain markets, and is still growing at 25%, which is remarkable considering, I mean, we had this pandemic boom, right? We've had double-digit growth since 2015, and we're still seeing double-digit growth, a little bit of a flattening in the next couple of years. But this just shows how superficially penetrated the region is in terms of e-commerce and digital payments, and how much more growth there still is to have. What are the growth drivers? What is driving e-commerce in 2024 and 2025? Number one, Brazil is always ahead. Pix has been revolutionary for e-commerce volumes, driving incremental volume. I mean, Pix is representing around 40% of e-commerce today. Much of that is totally new transactions because we have not seen cannibalization of credit cards in e-commerce. And so Pix is a huge driving force, and other A2A schemes like PCMI in Colombia are also providing access to e-commerce for people who never shopped online before as a preferred method when cards aren't an ideal way to access e-commerce. Aggressive entrance of our marketplaces from Asia and the local response to new competition. So we see, obviously, Shopee has already established local presence in Brazil. AliExpress was the first one to do it many years ago. We've seen Shein, we see Temu coming into Brazil and to Mexico, just sparking cross-border e-commerce, attracting those guys to invest locally, and also challenging local players to invest more in a wider product variety to stay competitive. Okay, digital services in terms of verticals, digital services, especially gaming, gambling, and SaaS are really driving growth. Cross-border e-commerce is a huge driver in Central America and the Caribbean. I'd just like to call those out because these are markets where cross-border represents the majority of volume there. Fueled by their proximity to Miami, local logistics intermediaries, and increasing digitization of the population. And then overall, increasing per capita spend in e-commerce. So people are just transitioning more of their expenditure from the physical realm to online. This reflects in improving consumer confidence, increasing trust, more accessible payment methods, just a better, higher quality industry overall. Okay. When we look at verticals, this slide shows us two things: the relative size of the market, as well as the growth. And something that's really kind of odd is that this red box is retail, which is the biggest box, and it's about 50% of all of e-commerce in the region. It's also the fastest growing vertical, which is you almost never have your largest market segment growing the fastest. Okay, so retail continues to be a huge opportunity. Of course, retail, physical products is a massive category, right? It includes so many things, and an increasing number of products are getting thrown into this category, which is why growth is so sustained. Also, these international players coming in from mostly Asian marketplaces are essentially selling physical products. So that's really what's driving growth there. Beyond that, we have gaming, right? Gaming becoming increasingly accessible, increasing low ticket, increasingly women and other kind of laggards to the industry are starting to participate. We have SaaS, which is a fascinating, it's a terrific vertical to study because it's directly related to the digitization of small businesses in the region. And so the more SaaS grows, the more we can expect a robust, resilient, digitized SMB segment, which, as many of you know, is mostly operates in quite traditional forms and doesn't have that much access to technology. So growth of SaaS is actually really exciting for the region as a whole. Okay. Great. Looking at breaking this down by market, okay, we see market size, right, and projected CAGRs. Now, what is interesting is Brazil, of course, dwarfs the rest of the region. Brazil has always been large, more than double Mexico, but with PIX, this advantage that Brazil has blossomed even more. What I think is quite interesting is to observe growth rates, right? Brazil's still growing around 19%. That will go down this year in our new projections. We're looking at the data, it's flattening out a little bit more. But what is interesting, markets that are growing still in above 20% is Mexico, Ecuador, Guatemala, and Paraguay, right? So under digitized countries that are experiencing a digital renaissance. And what is most interesting to me is that Mexico is in that category. This is the year for Mexico. Anyone here who is innovating in Mexico, working in Mexico, driving digital payments in Mexico, really starting to see some very interesting shifts. I'll get into it a little bit more. But Mexico, because of its proximity to the US, it brings a lot of investment, e-commerce, Amazon and others, Mercado Libre, as well as Walmart and other big retailers are able to access goods and services more easily just due to their proximity. So we see this market continuing to mature. Okay, so a couple of other trends that we're seeing. A question that I like to pose is, do A2A payments mean the end of wallets in Latin America? I recently had a client ask me, do you see the entrance of new wallets, right, in the region? And my answer was really no, I don't. The reason being, with instant interoperable bank transfers that are interoperable with fintech wallets, wallets as a wallet really kind of loses its competitive advantage. A really robust closed loop network no longer really has relevance when you have interoperable, instant, and free transfers. This is not ubiquitous around the region, of course, but that is the aggressive trend that we're moving to. We see Peru, Colombia, Argentina, Mexico moving in that direction. And so what's happening is that wallets, what we would call a wallet in Brazil, Recarga Pay, PicPay, Nequi, DaviPlata, Yapi, all of these kind of wallets are really simply becoming bank accounts. And there's a blurring line between a wallet, a digital bank, and a traditional bank that has digital functionalities. There's really a flattening of those differences. And so A2A has really worked to increase competition, create this democratization in the market, and forcing banks and wallets to compete on value-added services rather than their closed loop network. Okay. Cross-border. Cross-border is a fascinating subject always, and we continue to see cross-border gaining share, growing a little bit faster than the market. And this is really, we have several reasons here. The increasing attraction of global merchants to growth markets like Latin America, especially Brazil and Mexico, a growing number of PSPs coming to Latin America to enable these payments. Cross-border continues to be over $100 billion right now and growing faster than the domestic market. Okay. I'm going to go through a little bit of specific market insight, but I just wanted to pause, see if there's any questions. Danny, if you wanted to jump in at all.
Yeah, I have a question, Lindsay. This is great content, by the way. As it relates to the actual adoption of A2A and patterns that we might have seen in other parts of the world outside of Latin America, when I think of Southeast Asia, probably one of the most successful wallets that I see there is the usage of the WeChat wallet in China. And although that's obviously a very different use case in some cases, because there's only like 2 or 3 choices in China, given the environment there. Are there any parallels that you're seeing compared to kind of the most advanced use of a wallet equivalent, which is WeChat? I mean, it's probably the largest wallet ecosystem you can find.
Yeah, I think we're always trying to draw those comparisons. I think, wallets, or I would even call them neobanks now. They're not even wallets anymore. But of course, Mercado Pago, Recarga Pay, PicPay, Nequi, all of these wallets that began with very simple functions have really along there they've added functions as they've grown, and really today they're offering in some cases more services than a bank offers. They've incorporated more complex financial services, including credit, including insurance, but they're also including access to e-commerce, to streaming, to digital services, to travel. And so those types of platforms are walking in the footsteps of WeChat, I would say. They're not at that level. They don't have such a robust flywheel and ecosystem. They're not integrated with a social media and communication and messaging app in the same way, but they are increasing consumer engagement. Now, the other trait we've seen with these guys is they're not usually consumers' primary financial institution. Very often there's a bank that consumers tend to use as where they receive their nomina, where they get their mortgage, where they get more robust financial services. But these wallets are more so their day-to-day interface for all of their payment needs. So that's a dynamic we may not see in Asia as much, but I think that dynamic is waning as these players gain more legitimacy and increase their solidez, right? And as a bank, essentially, especially Nubank, which Nubank was never seen as a wallet. It was always seen as a digital bank. But today there's essentially no difference between a Nubank and a lot of these wallets that I'm mentioning. Got a great comment here from Ignacio, if you guys can read it, just commenting on how fast e-commerce is evolving in Mexico, along, thanks to Mercado Libre, Amazon, but also fintechs, Clip and Quest here making it easy, Spin by Oak. So I agree, Mexico is this for a long time, we've been waiting for Mexico to come into its moment. And for whatever reason, we're really starting to see some very significant traction this year. Danny, did that answer your question? Any follow-up you want to have there, or? Yeah, okay. Cool. So let's dive a little bit into different markets. We can kind of do a tour around the region. Starting with Brazil, what we kind of did this year in terms of our content was think about what's the one thing that you should be paying attention to in each of these markets to really, get up to speed and understand what's happening. And in Brazil, Pix is old news. Everyone knows that Pix has been this very important transformation story, but the story is continuing with recurring Pix launching now in June and Pix Parcelado or Pix installments launching later this year. So this is a forecast that we did at the end of last year. Again, we are updating this. Now the launch of recurring Pix has been delayed a few times. But nevertheless, so this jump may not be so aggressive in 2025. However, right at the end of last year, you can see that Pix, only for purchases, Pix P2M surpassed debit and started to get to the level of credit, and credit even went down. This is not e-commerce, this is just P2M payments overall. And so we haven't yet gotten full, ABEX data yet on the performance of cards. But Pix, we see Pix continue to increase, and recurring Pix has the potential to not only take transactions away from Boleto and traditional bank transfers, but also start to take share away from credit cards, which is, of course, maybe the number one payment method for recurring transactions. Now, it's unlikely that you're going to go into your app and change from a credit card on file to Pix. But if your credit card expires, if your credit card gets stolen, if you don't have a credit card, if you want to free up limit on your credit card, you may decide to, put your Pix in there for recurring payments, especially for utility payments, which are a little bit more mentally matched with a bank transfer than a credit card. So we do expect this to have a large impact. And then the Pix Parcelado or Pix installments will also be a major game changer and compete directly with NewPay, which if any of you have been following Nubank's kind of very innovative payment method, they kind of created their own installments on Pix, and now this will be available widely for the ecosystem overall. Okay. Mexico. Again, Mexico, I think, is the country to watch this year. I want to highlight how, if you look at, we've got three payment methods here. Whoops, this keeps jumping, apologies. We've got three payment methods: credit card, debit card, and SPAY transactions, but SPAY low value transactions, which is under around $600. As you all know, SPAY is real-time banking, real-time bank transfer system in Mexico, mostly used for institutional transfers, for very, very large transactions between businesses. However, when you when you look at total SPAY volume, we don't necessarily see major growth rates. However, when we look at SPAY low value transactions, we can see just how impressive this growth is since 2020, meaning that people and businesses are using SPAY more often for daily retail purchases. Okay, it's interesting to see that they're growing faster than credit and debit cards in 2024. However, credit, debit, and SPAY are all growing at impressive rates since the pandemic. Now, what's driving this growth? Consumer adoption of cards, fintechs, credit card issuing has really boosted in the past year through Nubank, through fintechs like Story and Lehr. Just in the past couple of days, we've seen announcement just today, yesterday and today, announcements from Amazon officially entering financial services, offering an account and a debit card. Huge news. We'll see how that evolves. We have OXXO, with Spin by OXXO, also connected to a debit card. So there's a lot of digital momentum. And I believe that SPAY, even though the central bank's efforts to kind of have a Pix-like thing in Mexico between CODI and DEMO haven't panned out, Mexican consumers understand that SPAY works very well, very familiar with SPAY, and this is growing as a payment method. It's still only limited to people who have a bank account, which is its biggest limitation. But even access to bank accounts has really increased over the past several years. So Mexico is a great market to be in right now. Okay, great. Colombia. Colombia, as we said, I think is the country to watch in terms of RTP development. They have actively been working with the Brazilian central bank to replicate something very similar to Pix. Breve is the brand that they've given it, and it is announced it is supposedly launching by the end of this year. What I think is interesting is already Bancolombia y Davivienda are enabling people to create their aliases for this system, and they're calling them chaves, right? Chave, the same term used in Portuguese, chaves, for your key to the system or your alias that you connect to your bank account. So just the fact that they're using that terminology is kind of telling us that they're walking in Brazil's footsteps as much as possible. Colombia is still a market with a financial inclusion gap, with a large informal economy, with a cash gap, and so there's a lot of interesting things to be done in Colombia. Okay. Switching gears a bit is Chile. Chile is a market that doesn't get enough attention, I think. Chile is the most successful card market in Latin America, with very high penetration rates of debit card, very, very high penetration rates of contactless. And if you are wanting to innovate on top of card rails, Chile is the country for you to go in. Soft POS and tap to phone, self-service merchants and retail enabled by contactless technology. Digital wallets, including Apple Pay and Google Pay, driving a lot of the commerce we're seeing in Chile, and one-click digital commerce, again, all enabled by tokenization and really a kind of mature card environment. Costa Rica, this is a really interesting market. We're just kind of jumping around to highlight some things. And when we're talking about A2A, Costa Rica is so fascinating because for years, for decades, they've had SINPE, similar to SPAY in Mexico. They've had it operational for a long time, very efficient system. And SINPE Móvil has been a massive driver of financial inclusion in Costa Rica. Again, a mobile compatible version of free instant A2A transfers. You can see, you know, the penetration of volume hasn't been as impressive as in Brazil. You still see cards kind of dominating in terms of volume, but this growth has been consistent. And it's been so consistent that the central bank is actually talking about changing the tax laws to recover some sales tax that has started to decline, since Simpe mobile transactions are not subject to sales tax retention like card transactions are. So merchants, when they collect funds, the acquirer is required to retain some of their sales tax. That same retention does not apply to Simpe mobile transactions. And so because of the popularity of Simpe mobile, the country has actually seen a slight decline in sales tax collection. So this has become an interesting problem for the government. They've really actively promoted Simpe mobile. But now they're starting to see, maybe I went too far with this. So that's going to be interesting to see how that plays out. Okay. And then just in Central America in general, which we know to be a little bit behind the rest of the region in terms of digital penetration. Again, this is being, as I mentioned at the beginning, this is the digital catch-up, I would say, that's taking place in Central America currently is really being driven by fintechs, this growing fintech ecosystem, in large part relationships and partnerships with CPG companies and more institutional large players going after small stores, small merchants, B2B supply chain, and kind of developing very simple tools to help small businesses get ahead and use technology. So there's a lot of examples. This is not exclusive to Central America, but this is where I tend to see the most exciting things happen in this region. Okay. I'm going to pause. That's kind of our little tour around the region. Of course, we didn't hit every country. Happy to touch on that if there are questions. But I'm going to go into my last section with just some additional bigger ideas, food for thought, but I want to pause and see if there's any country-specific questions.
Lindsay, there was a question from Jose Coronel related to Visa Conecta in Brazil.
I see the question here.
Is Visa, you know, how do you perceive Visa's latest move with the creation of Visa Conecta in Brazil? Is Visa trying to protect margins entering into the PIX space, alienating traditional players and our clients? What's your perspective on that?
Well, I'm not fully briefed on Visa Conecta. So I think I'm looking at this now. It's quite a new development. A little ahead of me on this one. But you know what I can say is Visa trying to protect margins entering into the PIX space, alienating traditional partners and or clients? I'd have to do a little bit of reading about this to get a better sense of what this is. But you know, the card networks have, you know, they found themselves flat-footed, right, with the launch of PIX and kind of, you know, this happened so quickly, and the central bank blocked WhatsApp Pay, you know, which was, you know, their response to instant payments in Brazil. I think they've been looking for ways to add value to PIX, a way to work with central bank and banks around PIX. So I apologize, I don't have a better answer, but I can look into that and provide an opinion. I just know that the networks and Visa specifically want to get their foot in the door and want to figure out how to add value to this system. I think they've both Visa and MasterCard have come around to the realization that A2A is here. It's going to stay. It's going to grow. And so let's partner rather than compete. However, I really don't know too much yet about Visa Connect.
Yeah, I mean, the one thing I noticed is that it does, Visa Connect is a very recent announcement indeed. It was just on the news recently. It seems like they're basically providing or facilitating account to account to the Visa rails, which is a strategy that I think is pretty clear
right?
for Visa. Yeah. They've been focusing on that for a while in other parts of the world, and clearly they're trying to come after PIX in some ways or complement what's already in the country. So I think it's an interesting development. I think we need to do a little bit more digging because it's just fairly recent, and obviously we need to see what it all details inside. But thank you, Jose, for that question. One question for you, Lindsay, as it relates to what you just covered. looking at all these developments and this blurring of the lines between accounts and wallets and some of the enhanced developments that we see in Chile, unfortunately, the region every country has its flavor, right? And you see the same thing in places like Southeast Asia, where China is doing its thing, and then you go to Singapore and they're trying to lead the way to regionalize things. Are you seeing any attempts in Latin America to create a regional standard outside of what we know with PIX? We know that the Bank for International Settlements has got some stuff going on in Southeast Asia, but lately they've been integrating some countries and some banks in Latin America to some of their projects that they are looking at as it relates to connecting wallets and ecosystems. Are you seeing any trends to regionalize a solution besides PIX?
It's a great question, and to be honest, I really don't. And it's surprising, when we compare Latin America and Southeast Asia, Latin America actually is the world region with lowest intra-regional payment flows. So, and it's a shame, right? There's very established trade corridors, US, China, Europe, right? But there really isn't too much regional integration that has taken place from a commerce and business perspective. You have migrants all around the region, you have, people flows. So the short answer is no, I haven't seen movement in that area. PIX is really the rail where we've seen PIX being accepted in Argentina, PIX being accepted even in Miami. Fintechs are, using stablecoin and doing other things to help PIX grow. But that's still yet to be really tackled in the region.
Thank you, Lindsay. Appreciate that.
Mm-hmm.
Okay.
Cool. All right, I'll get through my last section here and then we can take any questions. But you guys are throwing them in as we go, so that's great. So just to kind of wrap up, I want to share, some bigger questions that I know everyone is thinking about in Latin America. The top thing for me in Latin America is, I know we talk about AI and stablecoin, all these things, but I like to go back to the basics, right? There's still this massive challenge of the informal market in Latin America. This cash, not even cash, I'm talking informal. Now, informal and cash often go hand in hand. And what I like to tell my clients is there will always be a limit at which digital payments can penetrate due to the size of the informal market in Latin America. This just gives you a sense. All of you know, all of you see it and live it every day, but 72% of households in Central America rely on informal work for their livelihood. You can see what the rates look like here across the region. So this is Central America because this was a focus on a segment of the region that is still very entrenched in cash and a very thriving informal market. Now, most fintechs, definitely banks, and most fintechs kind of take the position, oh, well, the informal market is the government's responsibility. I can't play in that field. But I want to challenge that posture because we actually see around the world fintechs, including Stripe and Square and Cash App, developing platforms specifically to help small businesses formalize and manage their taxes. Now, this is US market, totally different context, I understand that. But my challenge that I want to issue the payments industry is that we need as an ecosystem to attack this informality issue and not run away from it and not say, look, that's the government's, that's the public sector's responsibility. Because if we don't, cash will persist. Okay. So this is kind of we just had a very fascinating, a local company actually doing this and working on this in a wonderfully fascinating ways. Tribu Tax in Guatemala. We just had a conversation with them in our coffee chat last week. A platform specifically designed to help digitize merchants so that they can accept digital payments, receive access to credit and other financial services. So something for the industry to really take a hard look at. Okay. Now I am going to touch on the hot topics. AI, this topic I'm personally quite skeptical of the hype around AI. Now we need to understand it because it's becoming a driver of business, and it's grabbed everyone's attention, right? What I think is interesting about AI in Latin America specifically is the supposed creation and launch of by Q3 of this year, of an LLM specifically designed, trained specifically for Latin America, using Spanish, Portuguese, and indigenous languages. Now this isn't immediately applicable to payments, right? The thought is that it will be first applied in education, public services, and other things like that. But it will provide a more localized and specific application of AI that will likely spin into commerce after that. So this is something to watch. Of course, ChatGPT and others that are trained on English language and in North American context are not going to be as applicable or powerful in Latin America. So that's very interesting. The other thing to be watching out for is, of course, Visa and MasterCard make both simultaneously, as well as PayPal doing a lot of announcements, deploying agentic commerce solutions. So both Visa and MasterCard have made their network compatible with AI agents, meaning giving AI agents permission to use a Visa or MasterCard credential in agentic commerce. This is still very early. We haven't seen real deployments of this yet. I would watch out for Amazon, especially because of how active it's being in Mexico, and Purchase For Me, the agentic commerce application of Amazon, which is already live for select users in the US. That they're the player to watch to see how this trickles down into Latin America. Stablecoin. This is always relevant in Latin America, in countries like Argentina, Brazil, Venezuela. Globally, stablecoin is having its heyday. Regulators are coming around to understanding stablecoin supply, and the overall market size continues to grow. It's being used for enterprise use cases, it's being used for retail use cases. Singapore is really being a leader here, but we also see it gaining legitimacy in the US with the Genius Act, with the regulation pending in Europe. This is already being used in remittances, specifically in Latin America, but we intend to see a lot more institutional adoption of stablecoin in the short and medium term. There's, of course, lots of challenges. Danny can certainly speak to that. But this is definitely something that we are paying attention to. And what I tell clients is this is something you just need to start learning. You need to be curious. You need to be talking with digital asset native companies that you can partner with to see what capabilities make sense for your business. Okay. And just to finalize, I don't have too much time, and I don't want to PowerPoint you guys to death. But we have some global predictions that we put out a little bit earlier this year, and these are global. They are not specific necessarily to Latin America, but they're very, very applicable. And just to comment on a few that I think are specifically relevant to the region. In the short term, with the growth of PIX and other A2A payments, push payment fraud is something, and scams is something that the industry is not prepared for, that we need to come to terms with. We haven't really touched on that, but with the growth of A2A, this is a really important priority. We're going to see contactless and recurring RTP becoming a reality, competing even more aggressively with other payment methods and continuing to digitize those payment methods. More in the medium term, as what my prediction here is that we're going to see an equalizing of fees across card networks and APMs, right? RTPs are going to start to be monetized. Commissions on MDRs on cards are getting compressed. So this will eventually equalize. And when that happens, we're just seeing the continued commoditization of payment rails. And so value-added services continue to be so essential to an ongoing long-term value proposition. We're going to see agentic AI and agentic commerce becoming central to the shopping experience in the medium term, I would say. And more in the long term is that finance in every capacity is slowly being rewritten on top of programmable money. And if you want to see how this works, look to Singapore and Southeast Asia. You have live use cases at the enterprise level for the affluent, in the retail segment, in SMB. So every payment use case is starting to be, digital currencies and blockchain are being leveraged for more efficient, faster, cheaper, smarter payments. And this takes a long time because of the complexity, but this is happening, being really led by Southeast Asia, and Latin America is a fast follower just because of the macroeconomic and monetary conditions in the region. So I'll pause there. There's more here. This deck can be made available to all of you, but I do see some questions, and I'm sure Danny wants to jump in.
Thank you, Lindsay. We do have a question from Peter George Smith. He's asking about any insights or developments in the Caribbean, in places like Jamaica, Trinidad, Tobago. He says that there seems to be some interesting things going on there. I, for one, I'm aware of a lot of crypto activity in certain countries there, as well as an increased level of engagement with wallets, but typically at the bank level, a lot of banks have been trying to preempt fintechs from entering their space in these markets, which are certainly smaller, so they want to keep their market, untouched. I don't know what perspectives you have there.
Great call out, Peter. I apologize. Caribbean always gets kind of neglected in these types of discussions. I would echo what you said, Danny. I think crypto and stablecoin, a lot of interesting developments there. Cross-border payments, right? Really, the Caribbean is a hotbed for cross-border payment innovation because there's such a high activity there, small markets close to the US, a lot of potential there. Jamaica, I know I've seen some interesting developments around, again, that formalization aspect I was talking about, fintech and even from networks, developing technology and platforms to help SMBs formalize. And beyond that, there's still a lot of stagnation, fragmentation, slow fintech development, but I would say that crypto and cross-border payments are the verticals to look at.
Thank you. As it relates to stable coins, do you think there is a possibility that maybe that's the end game for a regionalized play? Certainly we see the Coinbase IPO just, beating just about every optimistic forecast that was out there in terms of their valuation. And you see JP Morgan Chase also announcing their own stable coin version. We're going to see probably a myriad of issuances, but does it create an opportunity for a regionalized solution? I mean, certainly in some countries in Latin America, we're seeing stable coin being the way in which certain countries are being able to access US dollar valued, quote unquote, deposits or denominated deposits, although it's not a bank account, right? And in those cases, perhaps the stable coins may not be regulated in the US, but they have an equal footing to a dollar, at least based on how they're marketed. Do you see stablecoin being a potential conduit to facilitate that regionalization? And do you think we'll see a basket currency, or do you think we'll see the dollar kind of maintaining its balance there?
I agree, Danny. I do think that is the path forward for a regional solution, simply because we just haven't seen appetite from other sectors. We haven't seen it at a banking or central bank level like we do in Southeast Asia. We haven't seen it from a fintech, from the fintech side. So I do think I would agree. And the driver there, to answer the second part of your question, is dollars are in high demand. I wouldn't expect it to be any other currency other than digital dollar. And especially if it can be marketed that way and deployed that way as a digital dollar, which is easy for people to understand. If this is access to dollars, you can save them, you can transact with them, you can invest them. I think there will always be demand for dollars in Latin America, especially the farther south you go. So I would agree with that hunch. Yeah.
We have someone in the audience asking about CBDCs. Jose Coronel, thank you for the question. Actually, Alejo Martinez asking the question about CBDCs. Would that be another potential gateway?
I think stablecoin is going to come faster. Local central banks, they're struggling to take care of domestic payments, domestic interoperability, domestic A to A. managing the very, very strong bank lobby. I think I still don't see that being very viable or on a high level of priority. Everyone talks about it from a wanting to sound relevant. There's always a project or a working group going on, but I think the stablecoin movement is happening much faster and will hit regulatory roadblocks, but is able to move faster and have a bigger impact faster.
Absolutely agree with you. And actually, Jose Coronel just mentioned that that's the challenge, right? The regulatory side. But I think with the US clear direction and regulations that were just approved in the last couple of days, that's going to bring clarity. And banks in the US are going to be very open to stable coins. So now we would expect central banks and other governments to follow through on something similar for their own countries, following the digital money footsteps, right?
I would say so, and especially, countries that are really entrenched in global trade or that are already dollar denominated, Panama, right? They might have an advantage here, or they might be first movers. We'll see. This is very speculative, but as the U.S. gains more, as it gets more legitimate in the U.S., again, Latin America it'll come out of the shadows. Right now, it's been in, Argentina, Venezuela are these blacklisted countries where there's been adoption, but it'll become more and more legitimate and more amenable in the eyes of banks.
Absolutely. Thank you, Lindsay. I think you have a wrap-up slide.
That's it. Yeah, let me.
Okay, perfect. Thank you. All righty. Thank you again. We're gonna wrap it up now with a quick snapshot here of some key information that everybody should walk away with. First of all, thank you, Lindsay, for your time today. We really appreciate it. You've been outstanding as always. PCMI is an outstanding organization with significant knowledge and know-how, and this is not meant to sound like a commercial, but I really mean it when I say that when it comes to know-how and understanding the new trends and sort of dissecting these trends and understanding what's under the surface and what are the key trends, large companies, which include the large car companies, leverage some of the studies and work that PCMI does. So thank you, Lindsay. She has an amazing team. They're worldwide. I've had the privilege to work with them, and it's really a great opportunity to be able to have you here today. So thank you. If you need to contact Lindsay, you can follow her at Lindsay. Well, you can email her first of all, and then on stablecoins, they just released a recent report on stablecoins that is really, really useful. So there's the link to that stablecoin report. If you need it because you can't copy it fast enough or you can't take a picture of it, please either ping myself, Daniel, or Lindsay, and we'll be happy to provide that to you. You can follow us on LinkedIn, ConexAmericas. So we're doing these events on a monthly basis on different topics, following those 6 objectives we had. And if you want to watch today's webinar because you missed part of it or you want to share with someone, it'll be posted on our YouTube channel in the next couple of days. Also, this webinar was streamed, so the stream will remain on LinkedIn available for people to see once we edit it as well. And if you need to contact Daniel or myself, you can find us at our respective LinkedIn addresses and email addresses. And we want to thank our sponsors, 999 Global Ventures, which is yours truly's consulting company, and Pay Academy, which is Daniel's company as well. Again, thank you so much for your time today. We appreciate it. Thank you, Lindsay. You've been amazing. We appreciate it. And we're going to end the stream now. Enjoy the rest of the day. And happy Juneteenth Day to everyone that's celebrating it today.
Awesome. Thank you, everyone. Talk to you soon. Until next time.
Thank you, Lindsay.
Bye.